How are we doing, family? I hope everyone is keeping well, keeping safe, and trading safe as usual. Now, this is something I did mention I would do when I did the demand chain example. So it's literally the same thing, and sort of identifying what that chain or what that supply chain, demand chain, is intended for. Okay, and the intention of those chains changes depending on where price ends up mitigating into. Right? So we've had a look at demand chain examples in the past. So I will put that in the link or somewhere up the top right hand corner now. Definitely have a look at that. And now we're going to look at the same sort of format, but for a supply chain rundown. So just quickly to recap, let's say we have price that are making low lows, low highs. Then we get a break in market structure. Now this can be internal, it's just how you perceive it, okay? I'm just doing this for example, just so you guys understand the context, right? Now when we see this sort of action here, yeah? Now in the simplest form, we have an impulse, we're expecting a correction, and then an impulse. That's what we're expecting. So in order for this to now pull back, what we essentially need to start seeing is some sort of a chain starting to form. Yeah. So initially, the purpose of this chain is to just write it down here. Initially, chain has been formed in order to allow price to pull back. Yeah. Now that is initially what the chain started to form for. In doing so, what it's essentially doing is building liquidity. So if it then comes into, let's say, a POI of your choice that you're looking to, let's say, buy from, now at that point, that chain that was formed in order to facilitate that pullback is now used as a target. So now at this point, depending on where we mitigate into, that chain has now given us calls, i.e. liquidity, right, to target. So from here, essentially what you're doing is, oh, it's not what was supposed to happen. So essentially from here, you've got this to target. So remember guys, initially we've got this chain starting to form. So basically what I'm trying to say is, I'll just delete that, delete this. If you basically then got a mitigation into a POI, a pro trend POI, let's say, that you're looking to continue buying from, yeah, and then all of a sudden you're like, well, we've got this supply chain still forming here. Well, how much relevance does that have now? So is it, listen, it's always possible that price can do it, but how probable is that? Yeah, relative to the whole picture, to the whole overall story. Yeah. So like I always say, you might get reactions from here, but it's an interaction point rather than, don't expect a sustained move from here. What we should expect, right, depending on, so in this case, we've had a break in market structure, we pulled back into the extreme, we've mitigated into something in here after taking out liquidity, so on and so forth. This is what we, from an expectation order flow, what we're expecting. Yeah. So don't just blindly be like, okay, we've got a chain starting to form now, we're going to get a reaction from here. You might get a reaction from there, but it might not be sustained. Yeah. Sorry about that, guys. Just cut off there. Now, just going to do this quick little example before I leave you guys to it. So this high took out structure and put in this low, then essentially gave us a shift in market structure, putting in this high. Now, you might have different swing structures here. That's completely fine. It's not really relevant in speaking about what I'm about to speak about, but like I say, if you have different swing structures, that's completely fine. You can still use the same concepts. One thing I will say is within this leg of price, it's definitely multiple different internal levels of structures that you could potentially use to your advantage to get into certain positions, right? And I will be doing a video on that. Now, so we're essentially playing within this large swing range. No problem. Once we get that breaking market structure, what are we expecting? We're expecting a pullback. Yeah, so clear impulse here, clear correction, in order to pull back, and then we're expecting that next sort of impulse leg. So in order to see that correction, what do we have? So if I just zoom in on price here, we can see price here essentially took out liquidity, and we've seen that change character bearish. Okay, no problem, right? From there, we've now started to see this supply chain start to form, right? A series of mitigations into supply. We then have a little break here, back up to mitigate into the zone. This level up in here is now the last level that, this level essentially has to hold for supply to start holding, right? For supply to continue holding. But this is where we need to understand where we've now reacted from. So again, guys, just look at, sometimes it's good to just zoom out. Sometimes it's good to just zoom out and look at price from this perspective. Seen that large impulse, we then see this corrective price behavior. Yeah, so impulse correction. But just back to basics. So if I just do this with the discount premium tool, what's essentially happened here is we've now come back into discount. Now we've not just come back into discount, we've come back into mitigate a POI within a discounted zone, within a discounted region, shall I say. Yeah. So what's at this point, we can sort of start to think, right, potentially this is now going to get targeted. Right? So initially, this was to facilitate that pullback into some of these zones, or potentially into some of these zones here, right? But once we get into that, once we get into those pro trend zones, that's when we have to sort of look at it in a different way, right? Sort of see it as liquidity to that could potentially get targeted. So this is one sign that this could now start to fail. This supply chain could now start to fail. Secondly, we've seen that change of character. What does that change of character suggest? Well, it could potentially suggest that the pullback phase is over and the next impulsive phase is now upon us, right? And then the final thing that we want to see is when this chain now starts to fail, when we start to trade above this chain, right? That is a good indication that this is now going to get used as liquidity, yeah, for that next impulse. And if you just look at price, what has price done? In order to do that, in order for price to give us that next impulse, what's price done? Given us a demand chain, right? And then if you just look at on the lower time frames, you'll see a demand chain starting to form from here. Yeah, and prices repeats itself constantly, guys, and it's just sort of understanding how to use things and when to use it. Yeah, so I hope you guys took some value from that example. Like I said, I have done demand chain examples before, and I just thought I'd do a quick little supply chain example, especially with this being relatively recent. I'm not saying it's the most recent price action, but it's in July, relatively recent still. Something that you can definitely go ahead and study. So if you did take some value from it, and if you do like the content on this page, give it a like, give it a share, and if you've not already done so, subscribe to this channel. I'll see you all in the next video.